is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everyone. Basil Chapman here. Sorry, I apologize. It's not Tommy Jr. And second apology has to be, I know Tommy does a fantastic job talking about both the fundamentals and the technicals. I'm not going to be able to get into the fundamentals. It's something I listen to, but I don't actually participate in at all. Very little, I must say. So I'm going to go straight to the technicals. And what we're looking at here is that the Dow, let's see, the Dow itself closed at 35,200 at an all-time high on Friday after hitting 34,256. At this particular point, the futures are down 59, no big deal, at 34,023. And I usually expect that when there's a last hour push into highs, and then the following session, you invariably get some kind of a pullback of that last hour extra push. But at the same time, in my work, I have a number of many technical indicators, and one of them is something I call the Chapman wave trend gauge. Basically, it's Richard Arm's. This is his. I call it the trend gauge, and all that happens is I look at the numbers. I have nothing to do with anything else. I just look at the numbers, and if the numbers are very high, I anticipate within 2 days the E-mini futures will give a 9 to 11-point rally, and that should help the market, even if it comes off a low. But you've got to anticipate there's going to be a counter-trend rally, and if it's very low, it means that the Dow. This applies to the Dow. The Dow, following some very next session, no matter how high the futures are, should have a very sharp pullback and invariably go negative. Well, yeah, we are. That's already fulfilled this. Well, we haven't opened. The day hasn't opened. The day is young until we hit the 9:30 opening, and right now we're at 9:08 in the morning. All right, let's run these numbers. In the Chapman wave, we're looking for a number of aspects that are really important. I try to identify the lowest low bar, and then we merely count each successively higher peak. We alphabetize them. You can have 7 higher peaks, but it's alphabetized A, B, C, D, E, F, G. It's at that fourth highest peak, D, that other things can happen. And what we've seen now is that instead of in 2 to 3 sessions after the fourth highest peak going to a new recovery high, in other words, extending that leg, this took 4. But the YM, the futures, only took took 3 bars, and the S&P it's in leg D right now. So this is exactly the moment where other things can happen. So we've just got to be ready for that. For my subscribers to my opening call, we've actually added to a particular position this morning just for insurance, and we don't know. We really don't know. Why? Because if you look at some of the indicators that I use, I had a webinar on Thursday, and I was discussing these different indicators. That's available to anyone who's a subscriber to my opening call. In fact, all of my 8, 9 webinars are all available to you to peruse, all these different techniques that I talk about. So look, let me just show you in the Dow. The Dow itself, the MACD, the moving average convergence divergence, is very strong. It's not quite as strong as it was when it made that peak right there on the 18th of March at 33,227. But it is strong. The green line, the 9-period differential, is above the red slow-moving average. The stochastic is at 93.34%. That is really strong. On-balance volume is a little bit overbought. This is the only time I look at overbought and oversold is when I'm looking at the on-balance volume. Textbooks say over 80% for the slow stochastic is oversold. Oversold has this negative connotation. I say, are you kidding me? Look how strong the price of movement of anything you're looking at is if it's holding above 80%. But in the 90% area, unless it turns down sharply and goes back under 80%, that's a big positive. See, in a sense, I'm trying to fight some technicals, based on the Chapman wave methodology, especially when you get to a leg F. It could be F/B, an alternate count. But this is where I say be a little cautious. So the 9-period differential, this green line, is above the 14-period moving average. And that's a very good sign. Look how high it is. If it was, this green line was to cross under the black line, that's the 14-period moving average, to go negative as it did just for one day right over there back in early March, you would have to see a pullback underneath 33,400, probably 33,300 to get that to cross negative. So the anticipation in Chapman wave methodology is that, as many of you know, especially subscribers over the years, when we get to D or E, we're always taking a little bit of some kind of precautionary action, and it doesn't have to be in that indicator. It could be just a precautionary action overall. And at the same time, we are long. We are long from the very day of the low of March the 23rd last year, where the Dow went to 18,213. We bought option calls that very day, long. I believe it was at 191. The price was at one. The calls themselves were at 191. Anyway, we got out of those over a period of months. It took months to do a very big percentage gains. But a week later, on the 3rd of, just over a week later, on the 3rd of April, we bought the diamonds, and we've had those. We've taken a little bit off, but we're really long from that area. And I don't see any reason why we should get out of those positions. I'd rather have put options if we were thinking of shorting or whatever it is, but try to keep those core positions, because I don't think we're going back to 18,213 for a very long time, but we could have a pretty serious decline at some point over the next six weeks or so. But most importantly, the monthly chart, the reason why I thought it would be a good idea to do 2 hours today, do Tommy's show and then do my show, is that there's a lot to discuss, at least for me. And it's just a nice opportunity to think out loud. So while I'm doing that, let me just say, if I'm expecting at least peak Ds, a buy signal in the Chapman wave methodology, upgraded to a buy mode implies that at least a peak D, a fourth highest peak, will be made in whatever vehicle you're looking at, in whatever time frame. That's number one. And number two is it's the minimum of D. So that says on a monthly chart, if we're only in leg C in the Dow, this monthly chart, and if we are SPX.X only in leg B in the monthly chart, that's still very bullish for 2021, for the year 2021. I got to say that because it could be implying that the futures the S&P could go down there. No, S&P is at 41.85, and the futures right now are down a little bit. They're down about 10 points. All right. So with that said, what we're saying is that there could be a consolidation, a sideways to slightly down consolidation coming up on the shorter term. We don't know. Kind of preparing for that. And one of the reasons is that so many of these stocks have had spectacular moves. Yes, you've got the biggies like the Amazon. Look at this, Amazon. Trading down 10 points at 3390. Not an all-time high, but a high of 34.32 just 4 days ago. All-time high is 35.52. Got repelled at the trendline resistance. So it's at a high level. It's almost at all-time highs. So whatever we do here, you've got to be a little careful. I'll be back in a moment. I'm sitting here for Tommy O'Brien.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Everyone, we're back. Basil Chapman sitting in for Tommy O'Brien. This is the morning market kickoff, and I apologize because I know that Tommy just does a fabulous job giving you all the fundamentals. In other words, for instance, the GME. What does it say in the Tiger YouTube? CEO Garner GME up 11% pre-market, and he'd be able to expound and give you a whole bunch of details on that. Fabulous show. I really, if you're listening right now, you probably do listen to Tommy, but it's a show I highly recommend, and he's done a fantastic job both on the tactical side and discussing the fundamentals, which of course I rarely do, not in the way that he does it in terms of what's going on in the market right now. What are the fundamentals you need to be looking at? All right, so let's get back to the nitty-gritties. Apple made a round number. I always look at round numbers. Always looked at them, but especially back in the crash of '87, where there were stocks that opened, for instance, GM, I can't remember the exact numbers, but imagine GM gaps down, opens at round number, let's say 66, and then intraday has a 40 round number low, and then closes near the low, and then that was the low. I mean, that was an amazing thing. That's where it really instilled in me the importance of round numbers. Then, of course, with electronic trading, it's not as important, but it's just surprising how many times you can see round numbers. Look at this. Here's Apple round number at peak D at 135.00 for 2 days in a row. That's the high. Trading right now at 133.70, down a little bit. I never like, in the Chapman methodology, I never like to see a peak D under the previous peak. This was 145.09 way back in January. Plummeted down to 115. That's 30 points. I mean, that's it's almost a 20% correction. And then it has a rally, and then it can't make a new high. It stalls here. So I'm just saying this is a period where I've recommended to subscribers, we were raising some cash, got a little bit of a short position. I do like the fact that gold, let me just show you something very important here. Gold is acting very nicely. Yes, it's down 13 points right now, 1767, leg D. I do anticipate there could be some kind of a little bit of a pullback right here. But I think that gold, because of the Bitcoin, BTC, and there isn't an absolute direct relationship, of course, they're separate vehicles, but it will be surprising to me if gold, in a sense, doesn't take over the speculative aspect that Bitcoin had. Bitcoin right now down 5,645. Let me just say again that subscribers being long. The GBTC, which is the fund, it only trades during the day. It's a pity because you don't get that overnight kick. But at the same time, it's a little more conservative in that sense, and that's why I like it better than the futures. So that made an unusual peak C, so for all-time high, peak B in the monthly chart, and it's trading at 51.36. No, trading at 47.23. It just came down 4 points. And I said about that was on the 14th of April. I said, we're going to take another tad off right now at the open, which was 55.47. We're in from $12.48 for longer-term subscribers, and $12.41 for short-term on the same day. And we've actually had the same taking off numbers all the way because it just took off like, I mean, look at this, long from here. And that was just a really nice entry point. And that was back in, I think it was mid-October. And it screamed all the way to an all-time high of right there of 50, was that 58? I think, yeah, 58.22. And trading right now at 47. Big deal, so it's down 11 points. After coming off the lows in the 11s, I mean, that is a spectacular move. You got to anticipate that there's got to be some kind of give back. I think it's running out of steam. I've been saying that for about a week now, that I'm anticipating that this is somehow not a peak C. I couldn't label it anything else. It's very unusual to make an all-time high and then fail, but everything about it, even the webinars that I gave, the webinar I gave Thursday, and then the video that I did on Saturday, the overview for my subscribers to my opening call, I said, we took off right there, and I suspect there's a real problem coming up for Bitcoin, whether it's shorter term or longer term, I can't say, but I just think that it has to digest these massive gains. And I think that's where we are. If we're looking at, let me go back again to gold. Gold is now down 13 at 1767. Leg D, I suspect we could get a peak D and just kind of chop around here. I suspect the 1740 to 1720 level, that's going to be the test. If it can hold there, that's going to be very exciting because I think it's starting to build up enough energy to at least have a decent short to intermediate term, meaning weeks rather than just a quick pop over days. On the upside, we'll see what happens. Silver right now is down 1.31 at 25.79. It made a peak C underneath the previous high. It's got the H going to a lowercase m pattern. I speak about that a lot, but it isn't. I said about 2 weeks ago, I think it was, yes, that silver all of a sudden had a much better chart pattern than gold. And then all of a sudden, when it dropped to the 23s, it said, uh-oh, and not as good at all. And gold started to have a better, and I think gold gets into the fear factor rather than just the fact that Bitcoin is pulling back, just that there's an alternate look at trading in terms of the shorter term tradability of any medium. And this just says gold could maybe be it for a little while. Okay, next thing we're looking at here is going to be GDX. I was asked about, we'll look at GDX. Yep, GDX leg F/B. I did a whole thing on this. I even did my my webinar. I based a lot of it on these particular patterns. Look, there was a left side, right side price time match goes to today, and it said that the GDX should touch 36.28. The high on Friday was 36.13. Missed it by a few pennies. And now there could be a little bit of a pullback, but the MACD is good. Stochastics at 88%. So how it behaves is going to be really important. A couple of things I want you to also look at here, just in the shorter term, is finish up looking at the IWM, the Russell 2000. We've been long since the 173s. Hit 234. Pull back sharply to 208. Try to bounce. Is stuck in this range of the 220 to 228 level. It's at 223.81 right now. 84 down 84 cents. This is the iShares Russell 2000 daily chart. weekly chart, monthly chart. I put in this oval pattern, not because I thought there could be another bounce for the stork leg formation, just because very often, if there's no breakout, what happens is you make a turnaround and you come back down and you retest the lows, in this case, the 210s. I don't know if that's going to happen, but I'm watching this very closely because if it means that the small caps have now lost their favorability rating and are going to go out of favor for a little while, there's this rotation through the different sectors. Well, it turns out that the IWM and the Russell and the SMHs, the Market Vector Semiconductor ETF, did not make new highs. 258.59 was the high. Look at this. Way back, that was 258.59. That was back in mid-February, pulls back to 216. And then rallies and fails at a peak C1, C2 in the Chapman wave methodology. It's like a peak D, but it's a phantom peak, 257.54. And now it's just consolidating. It's not breaking down. But I want to see the semiconductors move with the general market. We've got a break coming up. We'll come back and the market will open. Bounce.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman sitting in for Tommy O'Brien. This is the morning market kickoff, and I'm just sitting in for him as I'm able to make this show this morning. I will also be doing my show at 10. I thought it was a good time to go give 2 hours of devotion to the markets because they really deserve it. There's a lot going on. So the Dow's open is down 53, and Dow is down on 46 at 34,151. The S&P is down 7, almost 8 at 41.77. So this is going to be a very important session, and I'll tell you exactly why I think it's important. Because if there is somehow a spike to all-time highs in the S&P, in the Dow, and the Qs today, that would just, I had an email just a moment ago saying, let's just see, very nicely worded. Hi, Basil. With all the Fed jet fuel pumping the market, are we looking at the perfect wall of worry, but every dip that drops a few hundred points until the spigot ends? Or do you truly believe a 10% correction will come sooner than later and keep some dollars for a new buy? Thanks, Kevin. So, Kevin, I'm in the camp that says at this particular point, because of the rotational aspect, I would definitely consider keeping some dollars just ready for anything through the rotation, through whatever is going on. And one of the reasons I say that is because when I went through all the charts that I could over the weekend, so certainly in the Dow, certainly in a lot of the favorable sectors, it seemed to me that it's isolated. It's isolated stocks that are holding the market up, which means that the market certainly can be held up. But it's isolated stocks. It's not like a uniform thing. Even within sectors, I mean, you saw what happened in the financial sector the other day. You got some just smacked very hard, and others held very well when the earnings came out. So I think this is there's no question that with earnings coming out, you can expect, you certainly can expect that in the marketplace, the favorable stocks are going to be very favorable, and the unfavorable ones, we'll see if they get decimated on the way down or whether they hold pretty well. That's going to be very important. So I just wanted to show you right here in terms of the, where did I go? In terms of the E-mini, right. The E-mini had a spike to the upside and made a peak E right there in the 1-minute chart at about 9 o'clock. Pulls back to a trough D, has a nice rally, goes to this. I could use that. I like to do this in the early morning at the start. Occasionally I'll use a phantom peak, 2 parallel high bars, especially if they're 2 consecutive parallel high bars. I make one a phantom, and then I make the other the actual, and then you can get to a D a little bit conservatively, maybe more quicker than you'd normally get there. I like to do that just to say, hey, I don't want to be messing around here. This could be a peak D in the 1-minute chart again. We'll see if it goes to 41.72. That's going to be really good action. If it actually pulls back under 41.69, that's not so good. So now what I want you to do is, within the context of the markets, I was going to put on a trade, but I won't do anything right now. I want you to show you the semiconductors. They tend to lead the market up, and they tend to lead the market down, and they've done that for years. There was one phase, I can't remember exactly where it was. Was it 2018, where the market went to a high, and it just missed going to the high one of the few times, and it led the market down. But in the meantime, most of, just historically, over the last 10 years, so it actually goes back even further than that, where the SMHs go, because that is, think of energy stocks, how energy was so important to the market for so long. Energy stocks, basically for the last, I'd say 15, 20 years, are really the semiconductors, because the semiconductors became the commodities that were absolutely essential to almost every part of the economy. So I'm watching this very closely, because if the semiconductors, which are just only down $1.77 right now, 250.78, if over the next 2 weeks, you start to see the SMH actually start to close on consecutive days underneath 246 to 244, that area, we'll give it about a 2-point range. But if it starts to close in that area and then below it, I think that we're going to have, no matter what the earnings reports are all about, I think we're going to have a more serious timeout, and that's what we're looking at. It could be time and price, but I think you've just got to be ready for it. This market is priced to perfection, but at the same time, if it doesn't produce a perfection, there's a chance that the Fed, with their stimulus money, with their pushing every single day, pumping money in to the market from what we can understand, that's going to give very good support to the markets. All right, with that said, now what I want you to look at is, all right, let's just get out of that. I want you to look, high-grade copper. High-grade copper at this particular point should be pulling back, and it's not. It's in the rectangle formation. It's up 425 right now, up 0.089. And this would be a brand new buy mode. So that's A, that's B right here. Just go from the lowest low bar. You need to count each successively higher peak, but you got to actually go to every peak. There's an A, there's an A, there's a B, and this puts us into leg C. But it's under the previous high, that peak D that was made right there, the all-time high. Was that the all-time high? No, I'm sorry, not the all-time high, the most recent high of 4.3755 back on the 25th of February. However, it's really important to consider that if high-grade copper is doing so well, that's a pretty good sign for the economy. And as I showed subscribers to my opening call over the weekend, look, we've got, can I do that now? I can't have too many charts up. So let me get out of this one here. Just as I'm about to go to show you the yields, wood, the iShares Global Timber and Forestry ETF, and the HGX, which is the Philadelphia Housing Index. But before I do that, just to cancel out of this, I have to go to this chart. This is VV. This is the Vanguard. This is very important because this is the Vanguard large cap ETF. And look on a daily basis. Look what it's done. It's got a little doji candle right there. Peak A, peak B, peak C. Peak A, B, C, and leg D. At D, you've got a little doji candle. That's again says, oops, just on a very short-term basis, got to be a little careful. All right, I'm going to get out of this. I want to show you something. So let's get out of that, and we go to, let's see, recent save, close workspace. Yes, store all, and we go to this one right here, and we're going to this chart right here. On the left, you'll see a black background chart. You'll see the 30-year yield in white, the TYX, the brown, the TNX in that's the 10-year yield, and the 5-year cyan-colored FVX is right here. And look, they're having a little bit of a bounce here, but they've made a peak D. Chapman wave peak Ds. You've got to be careful there. Fabulous recovery, beautiful cup formation, and it goes right back from way down at 8.837. It goes all the way to the high that was made the week of the 19th of 23.85. That's 2.385. And now it's pulled back a little bit. But look at this. New highs in the global timber and forestry.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hello, I'm Basil Chapman, sitting for Tommy O'Brien. This is the Market Kickoff. I'm sitting in for him today, and I'll also be doing my show at 10 in the next hour. So in the den, comment made, a trip to Home Depot Lumberyard is an eye-opener. Yes, the prices, in fact, when the Fed starts to price in, let's see, if they start to price in inflation, I actually don't know if they've been shopping lately, ever, because there is inflation everywhere. But what is very important, as far as I'm concerned, is that there's also choices. There are choices for price. There's a price appreciation, but maybe if you like, there are options to get other things. In fact, this is the greatest variety of almost anything, probably except opinion. In the history of mankind. I mean, you want water? You can get any flavor of water you want. You want bubbles? You want unbubbled? You want sparkling? You want whatever it is. And the competition for shelf space it must be unbelievable. Tea, I mean, anything you want. You know, there's a South African tea that we used to have. I'm originally from South Africa, Rooibos tea. So Rooibos, it isn't good enough just to have Rooibos. You've got to have Rooibos chai or chai Rooibos. I mean, just everywhere. So, but when you need plywood, you need plywood. That's all you can get, right? So there are certain things where there's price appreciation, and it isn't just a slight increase. It is a big increase. So I'm not sure, as I say. I think when inflation eventually hits, the Fed's going to be shocked. So the question is this a time where every single dip has to be bought? It's your obligation. Just buy every dip. And the writer just a few moments ago certainly has done that for the last year and a half. And it's been very successful. And I think that is a great way to go. I believe just for my subscribers, we've got a little cautionary stance right now. We have a lot of long positions. I'm a little concerned that we've got so many. Some of them had fantastic gains. We watched them get whittled away, so we were fortunate. And all the way up, we've been taking little bits off, trying to keep a core position. But this is important. So a question came in, what about the agriculturals? Well, look at this. For subscribers to my opening call, we've got DBA. We've had it for quite a long time. DBA is the DB Agriculture Fund. We're in around about the 13s. It's trading at 1759 right now. But look at this. Leg C in the daily chart. Leg E in the weekly says, you've got to be a little careful here. Leg B in the monthly. And I love it when it's a leg B in the monthly, except I like B to be strong. If it just is a nominal spike above previous A, this is a monthly chart, we've still got another quite a while to go before we wrap up April, but I'm watching this closely. So look at wheat. Wheat had a fabulous rally. It's running now. It's in leg C. This is a Chapman wave methodology that we did. I'll do it right now. It's called the Chapman wave falling axe formation, but in this case, it's slightly different. It's a variation of that, and it broke out of this declining channel. I like to think of it more as, let me see if I can grab that. There it is. As a falling axe formation means it's an expanding cone, a declining, expanding cone. Well, cones are always expanding, but declining is important. And now it's rallying. So there's a chance it's starting to make the rectangle formation. I spent some time in my webinar the other day talking about the rectangle. I've had whole webinars actually that include a chunk of time on the rectangle formation. What does it mean? It means that if there is a low bar after coming down, if you can get this expansion of this cone formation and break out above it, there's a chance you can have, especially if you're making higher highs and higher lows, of having a move toward, it doesn't have to go right to, but the target would be the previous high. But on the way, there are a lot of stopping points. 688.5 is the continuous contract of wheat. And here you are, you make a low from that level down to the 592 area, 593.25 was the low of the 31st of March. And now you've gone. That cannot be a peak A. You have to turn the corner. You have to see that you're making a trough. And you can only make a trough with a higher low bar. That starts the count. So that's your first peak A. Peak B, peak C. Stochastic is at 88%. That's good. MACD is good. So it says you can go to the next level of resistance, which is right here. It's 62.75. The high so far today is 660 and 660.75. So that's a good sign. And then the next one, the next target would be 668. And then you work your way up. But in the meantime, all the technicals are good. It's been a consolidation, but with a nice comeback. The weekly chart is still working very hard. The MACD hasn't turned positive yet, but the monthly chart is holding very nicely. And soybeans, continuous contract, very nice move up today, up 7.75 at 1441. It really needs to close decisively above the high of 1456.25. That was the high of the 1st of April. And then immediately you can start saying, aha, now we can tackle the previous high of the 8th of March, which is 1460 round number. And key support would be at the 1424 area. But basically, we're looking at quite an extensive rectangle formation with a slightly higher high. The rule of the rectangle formation is that within a shorter period, you should get to at least a peak D, just under, right on, or just above, and then it pulls back. That's exactly what it did here in the daily chart. You can see right there. And it's just consolidating at the high level. A huge leg A in the monthly chart. Can you believe going from the 830 area to 1440s? Unbelievable. I mean, that is single leg A up. And then, of course, you get Khan, as we say here in the Massachusetts. Peak C, G/C, it should go to a higher high, trading up 6 at 591.5. So, yes, corn's acting well. It's in leg B in the monthly chart. And we're going to be watching this one closely because, there you are, because the weekly stochastic is right at 87% and flat is what we like. And we'll see if that's able to sustain the price movement. So that's the agricultural price. Now, a couple of questions came in. What about coin? Well, coin is at 332. That's not bad. That's kind of the cash equivalent of the Bitcoin. Just thinking of it along that way, it isn't really, but just thinking of it along that way. So the questions came in on Thursday, Friday. Where would you get in? Personally, I'm staying away from this right now, but for people who are convinced this is the way to go, I suggested that in the 320s, start a position there in the between 312 and 298. Maybe you can split an initial position into two small pieces, and that's kind of the way I would do it if you really want to be in. I'm holding off. Let's just see where Bitcoin is right now. The Bitcoin is trading down 5,330, down 8%. Well, 8% is a lot, but 8% when you're trading in the tens of thousands, that's a big pullback. 655 was the 65,520 was the all-time high. Now you're trading at 56. You're down 10,000 points. That's a lot of points. So we'll be watching this very, very closely. Now, a couple of things that I want you to do. Oh, that's a break coming up. We've got one little segment left. So a couple of things I want to look at. Just real quick questions came in. Could I look at Apple? I said Apple had made the round number high. Yep, 135. Oh, it went high. It went to 135.33. Nice action. Congratulations, Apple.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. And just as we're wrapping up here, Basil Chapman sitting for Tommy O'Brien. This is Market Kickoff, and I'll be doing my show, the Tiger Technicians Hour, coming up after this. So we're looking at FSLR. Question of the day, could I just show it? Yep, I'm showing it. It's a nice action today at 84.21, up 5%. Hey, if it's able to close any day this week above 85.66, yeah, 85.66 to 86.10. That's going to be really good because I would say there's a really good chance that it could get to the high that was made at 89.20 on the 1st of April. That was peak C, and that would be a nice cup formation right here. And absolutely, it needs to, if it closes underneath today's low of 80.82, if it closes, it's got a little gap. So if it closes under Friday's high of 80.36, yeah, any close below 80.30 says, it needs more time. But so far, this is very nice. A weekly chart, it needs that extra leg B to show that it's got strength. But so far, a good move on the upside. So just a real quick overview. I'm looking at some kind of choppiness here, maybe sideways. We just don't know. Any new high in the Dow that goes into the 34,500s this week is just fantastic action. It really is. There's just no question about it. My suspicion is that we're kind of rotating, just taking a bit of a breather. The S&P is actually a little bit better than the Dow. Chart-wise, it's in leg D at 41.91.31 high. It's down a little bit today at 41.79. We'll see where it closes. If there's a sudden sell-off at the close, that says, all right, be ready for a couple of days of consolidation. Any break into the 41.95 area this week would be really good action. The QQQ, same thing. Made an all-time high on Friday. It hasn't made a new all-time high today. So at 340.90, if it's able to get into the 345s this week, very good action. If it slips and goes under 337, it says, oh, be careful, a little bit of a consolidation taking place. IWM is the Russell 2000, and it is weak today. It's down $1.46. At 223.11, it's just stuck in a range. It's not going anywhere at this particular point. So the VIX index, let's see where the VIX is. I've been waiting for it to get back into the teens. It's at 17.04. I'll talk a little bit more about it when we get to my show, the Tiger Technicians Hour, coming up. Basil Chapman, check out my opening call. I'll be back in a few minutes, and I hope you have a great day if you're leaving. Otherwise, hope to see a great program all the way through today. Hope you can stay.